You know what really gets under my skin? When the government makes changes to Social Security and nobody bothers to tell you the whole truth. Well, folks, something significant just happened that's going to affect millions of retirees across this country. And I'm going to break it down for you in plain English because you deserve to know what's really going on with your hard-earned benefits. The Social Security Administration just announced changes that could put an extra $500 a month into the pockets of qualifying recipients starting this February. Now, before you start planning that vacation or calling your grandkids, we need to talk about who actually qualifies for this increase and what it really means for your monthly check. Because here's the thing, when the government says millions of people, they're not necessarily talking about everyone collecting Social Security. There are specific criteria you need to meet. And understanding these details could mean the difference between expecting money that's coming and being disappointed when it doesn't show up. I've spent decades helping people understand their finances, and Social Security remains one of the most misunderstood programs in America. So let me walk you through exactly what's happening, who benefits, and what you need to do right now to make sure you're getting every dollar you're entitled to. Let me tell you something that might surprise you. The Social Security system isn't designed to make things easy for you to understand. It's built on layers of regulations, cost of living adjustments, and eligibility requirements that would make your head spin if you tried to read through all the official documentation. But that's exactly why I'm here today, because somebody needs to cut through all that bureaucratic nonsense and give you the straight facts about what's really happening with your benefits. Now, when we talk about this $500 monthly increase, we're really talking about several different factors coming together at once. First and foremost, we've got the annual cost of living adjustment, which you probably know as COLA. This year's COLA is sitting at 2.5%, and for many of you watching this right now, that translates to a meaningful increase in your monthly check. But here's where it gets interesting, and this is where a lot of people get confused. The COLA isn't the only thing affecting your Social Security payment. There are also adjustments happening to the earnings limit for those of you who are still working while collecting benefits. Changes to the maximum taxable earnings cap and modifications to how certain supplemental benefits are calculated. Let me break this down in a way that actually makes sense. If you're currently receiving the average Social Security retirement benefit, which right now sits at around $1,227 a month, that 2.5% COLA is going to give you roughly an extra $48 each month. Now, I can already hear some of you saying, Frank, that's not $500, and you're absolutely right. That's because the $500 figure applies to specific groups of recipients who are getting more than just the standard COLA increase. We're talking about people who fall into certain categories, those receiving maximum benefits, individuals who qualify for both retirement and disability supplements, and folks who are eligible for special adjustments based on their work history or family situation. Here's the reality that nobody wants to talk about. Social Security was never meant to be your sole source of retirement income. I've been saying this for years, and I'll keep saying it until people truly understand what it means. When Franklin Roosevelt signed the Social Security Act back in 1935, it was designed as a safety net, not a retirement plan. It was supposed to keep elderly Americans out of poverty, not fund comfortable retirements with travel and hobbies and all the things you dreamed about doing when you stopped working. But somewhere along the way, we lost sight of that. And now millions of Americans are depending almost entirely on their Social Security checks to survive. That's why understanding every dollar of your benefit matters so much. When the SSA announces changes like this, you can't just glance at the headlines and assume you know what it means for you personally. You've got to dig deeper. You've got to look at your individual situation and figure out exactly how these changes apply to your specific circumstances. And that starts with understanding the different components of Social Security benefits and how they interact with each other. Let's talk about Medicare premiums for a minute because this is where a lot of people get blindsided. Every year, your Medicare Part B premium gets deducted directly from your Social Security check. For 2025, the standard Part B premium is $185 per month. Now, here's the kicker. That's an increase from what you were paying last year. So even though you're getting a COLA increase on one side, you're seeing a premium increase on the other side. And the government calls this the hold harmless provision, which is supposed to protect you from having your net Social Security payment decrease because of Medicare premium increases. But let me tell you, when you're living on a fixed income, any increase in what you're paying out feels like a decrease in what you're bringing in. This is why I get so frustrated when I see news reports talking about these increases without explaining the full picture. Yes, your gross Social Security benefit is going up. Yes, the numbers look good on paper, but what matters is what actually hits your bank account after all the deductions. And for many of you, that net increase isn't anywhere near what the headlines suggest. You've got Medicare premiums. You might have taxes withheld if you elected to do that. And if you're in a higher income bracket, you could be paying income-related monthly adjustment amounts that increase your Medicare costs even further. Now let's talk about who actually qualifies for that larger $500 monthly increase, because this is crucial information. If you're someone who has consistently earned at or near the maximum taxable income throughout your working career, your benefit calculation is going to be significantly higher than average. The maximum Social Security benefit for someone retiring at full retirement age in 2025 is $3,822 per month. If you're in that category, a 2.5% COLA gives you about $96 more each month, but that's still not $500. So, what gives? The answer lies in combined benefits and special circumstances. Some of you are receiving survivor benefits on top of your own retirement benefits. Others are getting supplemental security income in addition to regular Social Security. There are people who qualify for disabled adult child benefits or widow's benefits that stack with other payments. When you add up all these different streams of income from the Social Security Administration, that's when you start seeing monthly increases that can reach or exceed $500. But you've got to understand that this isn't one single payment increasing by $500. It's multiple benefit streams all getting adjusted simultaneously. Here's something else that's really important, and I want you to pay close attention to this because it affects when you'll actually see this money. The effective date of February doesn't mean everyone gets their increase in February. Social Security payments go out on a schedule based on your birth date. If you were born between the 1st and the 10th of the month, you get paid on the 2nd Wednesday. Born between the 11th and the 20th, 3rd Wednesday, 21st through the end of the month, 4th Wednesday. And if you've been receiving benefits since before May 1997, you get paid on the 3rd of each month. This staggered payment system means that while the increases are effective in February, the exact date you see the money in your account varies. Let me tell you about something that drives me absolutely crazy. Financial illiteracy among retirees when it comes to their own benefits. I've talked to people who have been collecting Social Security for 10 years and still don't understand how their payment amount was calculated. They don't know what their full retirement age is. They can't tell you the difference between taking benefits at 62 versus waiting until 70. And they have no idea how working while collecting benefits affects their payment. This lack of understanding costs people thousands and thousands of dollars over their lifetime. If you took benefits early at age 62, you accepted a permanent reduction in your monthly payment. That reduction doesn't go away just because you reach full retirement age later. You're locked into that lower benefit amount for life, with the only increases coming from annual COLA adjustments. Now, I'm not saying taking benefits early is always wrong. Sometimes it makes perfect sense based on your health situation or financial needs, but you need to understand the long-term implications of that decision. Every year, you wait to claim benefits between your full retirement age and age 70, your benefit increases by 8%. That's a guaranteed 8% return, which is better than just about anything you're going to find in the market without taking on significant risk. This brings me to a point I want to hammer home because it affects how much you benefit from announcements like this one. The decisions you made years ago about when to start taking Social Security still impact you today. If you took reduced early benefits, your COLA increases are calculated on that reduced amount. If you waited and maxed out your benefit, your COLA increases are calculated on that higher base amount. It's the difference between getting 2.5% of $2,500 versus 2.5% of $3,000. The same percentage yields wildly different dollar amounts depending on your starting point. Now, let's address the working seniors out there because this is a group that often gets overlooked in these discussions. If you're under your full retirement age and you're still working while collecting Social Security, there's an earnings limit you need to be aware of. For 2025, that limit is $23,400. If you earn more than that, Social Security withholds $1 in benefits for every $2 you earn above the limit. But here's what most people don't realize. That money isn't lost forever. When you reach full retirement age, Social Security recalculates your benefit to account for the months when benefits were withheld, and you get credited for that. But in the meantime, it can feel like a penalty, especially if you're counting on that income to cover your expenses. The year you reach full retirement age, the earnings limit jumps significantly to $62,160 for 2025, and the withholding formula changes too. Instead of losing $1 for every $2 over the limit, you only lose $1 for every $3 over the limit. And this only applies to earnings before the month you reach full retirement age. Once you hit full retirement age, there's no earnings limit at all. You can make $1 million a year and Social Security won't withhold a penny of your benefits. Understanding these rules is critical if you're planning to work during your retirement years. Here's something that keeps me up at night. The future solvency of the Social Security system. According to the most recent trustee reports, the Social Security Trust Fund is projected to be depleted by 2033. Now, that doesn't mean Social Security goes away completely. It means that the program will only be able to pay out what it collects in payroll taxes, which is estimated to cover about 79% of scheduled benefits. So we're potentially looking at an automatic 21% cut to everyone's benefits unless Congress takes action to shore up the system. This is why I tell people you cannot rely solely on Social Security for your retirement security. You need other sources of income: pensions, retirement accounts, investments, rental properties, whatever you can build for yourself. The political reality is that fixing Social Security requires tough choices that nobody wants to make. We could raise the payroll tax rate, which means workers pay more. We could increase the maximum taxable earnings cap, which affects high earners. We could raise the full retirement age, which means people work longer before getting full benefits. We could means test benefits, reducing or eliminating payments to wealthy retirees. Or we could do some combination of all these things. But every option has political opponents, and every option creates winners and losers. So instead of dealing with the problem, politicians kick the can down the road year after year, and the day of reckoning gets closer and closer. This is why announcements about benefit increases, while important for your immediate monthly budget, need to be understood in the broader context of the system's long-term challenges. Yes, you're getting a COLA increase this year. Yes, some of you will see significant bumps in your monthly payments, but the underlying financial structure of Social Security remains under stress, and that's not going to change unless we see major reforms. And let me be clear, I'm not trying to scare you or suggest that your benefits are going to disappear tomorrow. What I am saying is that you need to be realistic about what Social Security can and cannot do for you both now and in the future. Let me wrap this up with some practical advice that applies regardless of where you are in your Social Security journey. First, create a My Social Security account on the SSA website if you haven't already. This gives you access to your earnings record, benefit estimates, and important documents. Second, review your earnings record for accuracy. Mistakes happen, and catching them early prevents problems down the line. Third, understand your full retirement age and what it means for your benefit calculation. Fourth, if you're married or divorced, explore spousal and survivor benefits to make sure you're maximizing what you're entitled to receive. Fifth, consider the tax implications of your Social Security income, especially if you have other sources of retirement income. And sixth, plan for the reality that Social Security alone probably won't be enough to maintain your desired standard of living in retirement. The bottom line is this: yes, there are benefit increases taking effect this February. Yes, millions of people will see more money in their Social Security checks, but the details matter enormously, and your individual situation determines exactly how much you'll benefit from these changes. Don't rely on headlines or secondhand information. Take the time to understand your own benefits. Verify the numbers on your own statement and make informed decisions based on facts rather than assumptions. Your financial security and retirement depends on it, and nobody cares about your money as much as you do. That's just the reality, folks. And the sooner you accept it and take control of your own financial education, the better off you're going to be.